Welcome, folks, to another evening of talking credit banking, finance strategies to make sure that you can accelerate where you are today and get out of debt as quick as possible. Now, what I'm going to go ahead and do is, let's see here. I'm going to go ahead and share my screen with you. That way you can see what we're actually looking at. Here we go. All right, everybody should be able to see my screen. And once again, credit banking and the search for the lost American dream. Welcome out, everybody. Now, before we dive in today, because of course we talk about finances and different types of banking, legal, tax strategies, I'm not a licensed attorney, accountant, financial broker, or any other licensed individual. Even if I have those licenses, I'm not acting in that capacity today. Therefore, we'll not be discussing specific situations. Everything here is general information only. We always recommend that you engage the services of professionals when making decisions that have a legal impact, especially financial decisions. Of course, there's our contact information for you. Wise Guys in Ties, 888-524-9273. My name is Ray Fleming. I'm one of the Wise Guys in Ties. And tonight, we're going to be talking about budget. So it's one of those words that not a lot of us like to deal with. Budget is somewhat of a bad, B word, as many would refer to it. And ultimately, we want you to get over this fear, or if you feel that it's difficult, it's not something that is something that everybody does. But in order for us to move forward effectively with this strategy, we need to understand where we are currently today. Now, next week, we have a really phenomenal case study that is going to be taking place. We're kind of bringing back the case studies where real life numbers that have been submitted. We're going to work that situation and really start to implement all these tactics and strategies that we've been learning. And of course, we would love to have you submit your numbers too. But before we can analyze anything, we need to know what it is. And many times when I ask folks, hey, so, how much extra money do you have at the end of the month? They might say, 500 or 1,000, but then it could be absolutely no money, or maybe they have more, they have less. It's one of these things that if we're not paying attention to it, we don't know exactly what to do. So as we're kind of going through some examples, I want to talk about really, you've seen some of this before, maybe this is your first time, and welcome, but budgeting. We're going to use a sample budget here, but I want to use it in a little bit different context tonight, talking about what type of information we need to see, not only in your monthly budget, or what you will want to be able to see in your budget, but also gives you an insight to where funds can be allocated that you're not sure that, there might be more there going than you would have initially thought. So let's say that you have $5,000 coming in on a monthly basis. Where do we put those funds? Your first thing, when I ask you that, where are you putting this money? Well, it's probably going to some type of institution. And when I say that, it's most likely your bank. And then it's what? We have to start separating that out. So as soon as we put the money into the bank, we're going to have to start to break up this pie. As soon as we do this, when we start to put all of our funds into a pie, it starts to become scarce. Like there's only a certain amount, and it keeps us a little bit more constricted to the traditional way of feeding, or I shouldn't say the traditional way of feeding, but the traditional way of thinking that if somebody has maybe more money than you, then they are taking part of your pie, or there's not enough pie to go around. Well, the truth is there's more than enough money out there. But we got to first focus on, hey, what's the budget of your house? So even though we separate it out into a budget, we need to understand that our budget is not necessarily that's all the money that we have access to. The budget is just what are we already allocating these funds towards, how to move forward from that. So the first little section is are mortgage or your rent. Typically, the house is the first thing that gets budgeted, and you're going to want to do this for your budget as well. There's a couple different situations. If you're a renter, well, then you have your monthly rent there. If you're a homeowner, if you own your home, maybe there's an amount that you're putting aside each year for taxes. This is all just housing costs and expenses. Now, we're also going to factor in for our cars. Now, as you notice here, underneath me on the right-hand side, we have loans, which is $1,200 a month for that mortgage payment. And I'm also putting the amounts. So here's $200,000 mortgage, and that is at 6%, which coming very soon, we will be changing that because now that the 2020 census is nearing completion, we're going to have some new statistics to work from. So I anticipate that percentage rate goes down to somewhere around 4. And so that's kind of what we see a lot more right now. And even with interest rates being as low as they are, maybe even like 3. So these were gathered from the Bureau of Labor and Statistics. And of course, these are about 10 years old, all of these statistics. So we kind of modify them slightly, but the principles remain the same. That's what's important. It's not so much in this case the what the exact numbers are. It's how does this all function? Now, we also, as you look here, our little piece that we're talking about right now is the car, $600. That's what currently was being allocated to 2 working households that had 2 vehicles, an average monthly payments of $600 and total car debt at $26,000. Now, the next little section of our month is, in this situation, credit cards. Now, you could either have credit card debt or maybe you have no debt at all that is on credit, or maybe you just have retail credit. Whatever that is, there's a payment associated with this. The average for 2 working household income in the US is access to about $15,000 on credit. However, they're carrying a $12,000 balance. And the average interest rate, which hasn't really changed on credit cards, 21%. Of course, there's promotional periods, and if it's a credit union card or a business card, that might have a better interest rate, or if it's just a standard credit card, you could see up to 25% interest. Really swings across the board. So we're putting this also on the left-hand side of your screen. As you notice, we're separating out lines and loans. There's a difference there. The amortization is different, and the way that they're paid and the interest is calculated is slightly different as well. So we want to keep these separate because as we go through this process, we're also going to talk about how those payments are different as well. So as we look at the lines on the left-hand side, that is $600 that is being allocated from our monthly income each month to pay that. Now, this $1,200 section here, this is your lifestyle. So it's been a pretty wild year, and this has changed for so many folks. Maybe you're not having to go to work, and maybe you're working from home. So going out to eat now turned into trips to Costco. It's really amazing how things can change, and which is very, very important because as things change, we need to reevaluate. So once you have a good idea about what the finances look like, it's not like you have to go crazy with it all the time. It's only as soon as things really make a drastic change is when you really would need to kind of step in and change what is taking place. So this $1,200, you're going to really want to put out, you want to keep track of, the trips to Starbucks, the gas station, really anything and everything that comes out of your pocket. You want to get a real realization of what that is, what that looks like. Because you may think, oh, I spend $10 a month on coffee, when in reality, maybe it's $100. So part of the budget first is understanding where we're currently at, and then it's utilizing that to find places later on that maybe need to be less utilized. For example, getting drive-through coffee might be something that we start to budget ourselves on. So I want you just to understand that as we talk about that budget, it's just getting real with where you're currently at and then coming up with a good plan moving forward. Because right now it might be a little bit scary, but that's okay. Think about it like working out for your first time. It could be intimidating, going to the gym. I used to think that it was really intimidating, um, because I was thinking to myself, well, I'll go to the gym when I get in shape, right? Or maybe I start losing a little bit of this weight and then I'll show up to the gym. I don't want to look like a fool. Think of this as your, personal training. This is, hey, what's your confidence level going into this arena when, hey, when you tune into these credit banking masterminds and these webinars, and we start to talk about all these strategies, this is really where you're kind of getting that personal training. Or it's maybe a buddy that has already been there and is now sharing some tricks and tips on, hey, this is how we lift the budget dumbbells, and we're going to work on the line of credit, bench press over there and things like that. And so then you start to have confidence that as you can learn these different tools and start to come with that realization that really when you take that next step and you go over to like our level up in real life and you start to integrate into either, wherever you're at, if you're repairing your credit or you're moving straight into implementing the credit banking strategy, or you've already figured this out because you've been hanging around with us long enough and now you want to take it and start having your money work for you. Wherever you're at in that, it's this is just part of that process of getting those big financial muscles. So getting real with where we are on what we're spending. And then the last, another very crucial and important aspect to your whole financial picture is retirement and savings. This is something that is going to look different for every person. There's not just one size fits all, which unfortunately is the way that we've been taught. School and training, traditional school, it fits a certain size of person, a demographic, and a state of mind, a learning ability. A lot of other folks like trade schools because they're more hands-on or they're looking for a specific vocation. We all live and learn in different areas, and that's why it needs to be catered to what you are doing specifically. Now, if we think about retirement and the 401k and the IRA, majority of people are doing the same thing. It's that, what is everybody else doing? It's the Showtime rotisserie cooker, the set it and forget it. It is, oh, I have a match from my employer, so it's going to go here. And when you do that, you also have a shopping menu. There's something that's very important about when you have a 401k with your employer that you need to understand. Now, one, there's nothing wrong with having a 401k. Absolutely nothing. Um, as long as you understand what the process is. You may have a plan, and then there's somebody that services that plan for the employer that you're with. And they provide you this shopping menu and they say, okay, here is a list of these mutual funds, here's their returns, or maybe they don't even state that, but maybe you do a little research. And let's say that there's 30 to 50 available. Well, they those little mutual funds pay money to actually get put on that list. Think about Amazon. There's if you go to Amazon, you got like the best sellers. The ones that are like big, they're selling a lot, they fulfill a lot of that's, the same thing with your 401k options. There's these big, mutual funds, they have some consistent average returns and, they get usually a big bulk of that list because they can pay the money to actually service it. Now, the other aspect about what retirement plan is where is it going? And another aspect to investing is simply you're always pretty much going to be investing into a business. This was one thing that I didn't really understand. I want to camp out here for a minute because One thing that I didn't understand is regardless if you have a 401k, if you have an IRA, if you're in precious metals, if you are in real estate, whatever it is, it all goes back to business, which was very interesting to me. And I thought to myself, well, how is all this connected to business? And I first looked at precious metals, and people are like, well, precious metals are not connected to business. You're not directly investing into business. And I said, oh, contraire, you absolutely are, because there's always going to need to be some business that is processing these metals. So it's always been seen that, if you're investing into like gold and silver, you're kind of betting against the economy, because when things start to go sour, metals are usually what rise in value. And so it's usually a flip flop. It's a way to hedge your investments. Now, when you're thinking about precious metals, you got to think there has to be businesses out there that are going to be processing these metals. It's something, and there's jewelry, and a lot of this also goes to helping there be a value associated with that. They use gold in a lot of computer parts, they use metals in all those things. So, all those businesses out there support something like precious metals. Now, if we think about mutual funds, well, how are those businesses? Well, each mutual fund on its own is a business itself. It's a financial business. So when you actually invest into a mutual fund, it's a company. And that company's job is to take those funds and invest it. And each company has a different model. And something you want to think about, which not to um, no, I was about to dive into something that's more current. I don't necessarily want to dive there today, but the analogy I'm going to use for this is think about a restaurant. Think about a fine restaurant and think about the chef. I'm sure you've seen Gordon Ramsay. And you may be thinking, whoa, Ray, where are you going? Gordon Ramsay, precious metals? Think about Gordon Ramsay. What if Gordon Ramsay never tasted the food that he served? Something to think about. What if Gordon Ramsay never tasted the food that he served? How could any successful chef have created something of beauty if they hadn't even tasted it themselves? And so there's a lot of things that are being distributed right now and thought about. And if you look at who's at the top of those companies, the CEOs, the hedge or the fund managers, so CEOs of certain companies that are distributing at a mass scale a certain product, or you think about fund managers who are distributing at a massive level. Are they tasting their own food? Are they willing to go in with you? It's a very interesting thing to see, because most mutual funds, the fund managers themselves, are not invested in that fund. It's something you need to think about. It was a shocker when I found that out. And so the thing that turned me into real estate, I figured, hey, everything's going to be invested into a business or into real estate or something. Then what about real estate? And what caught my attention was that banks, financial institutions, the least risky institution of all, the one who will never give you a penny to actually go invest into stocks or mutual funds. A bank's not going to loan you money for that, but they'd loan you money for the ugliest piece of real estate in your entire city. And they would go into that with you all day long. And so that's when Richie and I, we were thinking about, this whole leveling up in real life. And there's this huge aspect of that that's real estate related. And for example, tonight we're going to be playing. We're going to be playing Cash Flow live tonight after this training. So it's something you want to tune into. But understanding your retirement account and whether you're going to be in stocks, you're going to be in mutual funds, you're going to be in index funds, you're going to be in real estate, precious metals, wherever you're going to be, there's always going to be businesses associated with these. So understand where your retirement is going to be. Now, that kind of gives you a good idea of where your picture is, but also understand when you create a budget, understand that you yourself are a business. And as being a business, you need to make sure that you understand the accounting. I mean, think about, any financial institution or any business, they couldn't get by without keeping track of their spending. And the same as us as humans, even though, like I'm the breadwinner basically of my family. So me myself am kind of a business, even though I have businesses, my ability to produce income, and whether that's going to a job or owning a business or running a company, whatever that is, I myself am a business that is creating the income. So it's very important to make sure we understand where we are. And if we look at our financial picture, and we're breaking even. So if we have $5,000 coming out, $5,000 is being allocated to everything that we're doing in life. We're running out. We don't have enough money at the end of the month. So from a business standpoint, from an investment standpoint, whichever standpoint you want to look at this, think about in $5,000 of revenue coming in and that 5,000 getting spent, but not on just assets or building of the organization. There's a lot of liabilities here, lots of liabilities in our personal budget. And that's when we just need to understand there's nothing wrong with having some of these doodads and these liabilities, but it's what if we start turning some of those liabilities into assets? What if we start turning in some of those liabilities into tax write offs? How can we do this even though we have a regular job? And that's when you start to realize wealth creation. It's not that everybody out there is going to create a Facebook and create this WhatsApp that sells for billions of dollars. No, 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 no. The majority of people are going to achieve their wealth by taking what they've already started, their career path they've started, or starting some side hustle, or maybe they're going to make a career change. But it's about being smart with the money that we have, learning how to leverage that into investments that are going to pay us later on into the future. So, wherever we're at, understanding the budget today is to understand where we're going to be in 10 years, where we're going to be in 20 years. Or maybe you're thinking, hey, I retire in 4 years from now, or I want to retire in 4 years, but I'm not on track to retire in 4 years. Well, hey, let's accelerate that process. And ultimately, I see a lot of folks who towards retirement start to pull back the reins. They're like, oh, whoa, whoa, whoa. I don't have enough, but I also need to be very cautious about what I have. Absolutely. You need to be cautious. But going a certain direction of cautious means no money at all. Being wise or becoming knowledgeable about secured investments where you protect it, you hedge it, is something that really needs to be done. Hey, Michael Ray, what is up, buddy? Hello. And big shout out to Deanne, Deb, George, Jamie, um, and Jamie. We got two Jamies in here. And Lorraine, we got Michael Ray. Good to see you, buddy. We got Monty, Patrick, Robert, and we got Richie. Richie GP's in the house. Good to see you, Richie. So, how do you know which debts to pay off first? And that's something that one of the last things we're going to kind of talk about tonight is once you understand this thing, how do you start even figuring out where to go? Well, identify which debts are most inefficient is one excellent way to go. So, this is just one little tool in that tool belt. What we're going to cover right now is going to help you to better evaluate your situation, to be able to look at it from multiple angles, multiple viewpoints, because like we said, nothing is a one size fits all. And so if you run into a certain situation with your budget and then you're looking at implementing these strategies, and then One thing you're going to want to look at is the inefficiency of these debts, because just saying, oh, I'm going to start with the lowest amount, or I'm going to start with the highest amount, or I'm going to start with this, just some arbitrary prediction or guess may not be the right choice. So, should you pay off that smallest or biggest debt, or the lowest or highest interest rate? So, use this formula to determine your debt efficiency. So, debt efficiency is calculated by efficiency equals your loan balance divided by your minimum payment. Now, this could be credit balance, loan balance, whatever the balance of your debt is, divide that by the payment, and that will give you your debt efficiency. And then here we're going to use an example. So, loan number one, if we're looking at the efficiency of this, a $10,000 loan, if it has a $100 minimum monthly payment, that is one efficiency versus another $10,000 loan, loan number two, with a $1,000 monthly payment. Once again, if we're looking at this, the E equals efficiency of the debt equals loan balance or line balance divided by the minimum payment that's required. Loan number one has an efficiency of 100. What does that mean? Is that good or bad? Well, we'll talk about that. And loan number two has an efficiency of 10. So what do we do with that knowledge? Well, let's take a look at the debt efficiency continuum. So the closer you are to 1 or 0, that is the more inefficient a debt is. It's your ability of leverage. It's, well, am I able to leverage a large amount of money, or am I able to only leverage a small amount of money? Those are the big things. So mortgages, especially nowadays, can pretty much be a very efficient product. But short-term car loans are extremely inefficient. And getting an idea of which of your debts are the more efficient ones versus the inefficient will help you to understand where you're going to kind of go. Now, remember, this is kind of just one aspect of the entire process, but having the ability to look at the efficiency is important. And it also is something to think about when going into debt. If you're looking at taking out some debt, one thing that you want to think about is the efficiency of this. Am I going into this because I'm only going to refinance it, or am I going to need to refinance this? This also comes into play because many times your biggest debts could be very efficient because you're able to leverage a large amount of money with a small monthly payment. And so lots of times when we talk to folks, they're like, oh, I really want to get this mortgage paid off. I'm going to start chunking my mortgage tomorrow. I got this and I'm going to do that. Well, perfect. Um, if that makes sense, does it make sense to be doing that at this given time? Um, Sometimes they've have 8-year car loans that they just started, and it's a really inefficient payment on that. Well, maybe that's what we look at. Or they have these short-term personal loans with really high interest rates, and they're just beginning the whole process of that. There's so many different products out there. It's kind of important to know, and this is one thing that will help you start to see, well, hey, which ones are really bleeding me as far as my leverage ability or the efficiency, and which ones are a little bit better. And then that combined with some other strategies is really going to help you get a good direction. Okay, so as we talk about all these things, we've talked about lines versus loans, the difference into that. We need to get real with our budget, and an excellent place to get a budget sheet. We talked a little bit about that last week as well, but just doing a Google search for spreadsheets, Word documents, something you can print out, grab a whiteboard. There's a lot of phone apps out there. There's so many different options for easy budget sheets. If you need one, I got one on an Excel sheet. Just shoot us an email over to shoot it to Ray, R-E-Y, at wiseguysandties.com. Yeah, shoot me an email. Let's talk about it. Getting plugged into Level Up in Real Life, going through our website that has been created is going to be extremely important for you to understand all these processes, all these systems. Richie has spent, I don't know how many hours, a lot of hours creating this process, this training model. You know,
Still spending hours.
yes, still spending hours. Hey, good to see you, my friend. How are you today?
So busy, but good. How are you?
I'm excellent. It's hey, it gets that time of year, right? Um, Honestly, things get a little wild, especially if you're a parent and you got Christmas coming up and just things get so wild. I'm thinking to myself here, we're watching a family friend's kids. She's got 4 kids, and her husband is a manager of one of the grocery stores here. And with people calling out, and he's got all this stuff he's got to wrap up before the end of the year. I mean, he's been booked. I mean, he's just working 7 days a week, and his wife with her 4 kids and homeschool, and then the kids were sick like a week ago, and then she's like, oh my gosh, like I'm losing it. We're like, okay, well, hey, bring the kids over, because one, you'll entertain my kids, and now I just have to play referee, stick my head out the back door and blow a whistle, every time they get a little too rowdy. But I guess that's the benefit of being in Arizona. I don't know where everybody else is. You're all across the country. You might be where it's really cold. I think we hit like 78 today. Kids are just like running around, t-shirts and shorts, playing soccer. So Christmas in Arizona, Southern Arizona, looks much different. Unless we probably look a lot like Hawaii. How's Hawaii right now?
Super sunny, nice, and I like the low is going to be like 66 tonight or something like that. But right now it's, I think, 81. Right now it's 81 degrees. So
Perfect. What else we got here? Oh,
we have
we have
snow.
snow. Okay, so Deb's in Ohio. Fantastic. So nobody's running around playing soccer, but you obviously can be out there building snow angels. We build mudmen, not snow angels. One, we don't have sand or beach or snow. We have dirt. We got lots of dirt and cactus. So our dirt men usually have like a prickly pear sticking out of its nose. You know, our kids are just tougher. No, I'm just kidding.
That's
It is.
awesome.
Um, but you got a little downtime. So hey, if you got some time off of work, make sure, hey, plug into Level Up in Real Life. Also, in about, I don't know, roughly about an hour from now, we'll be up and running, or maybe a little bit quicker than that. On Twitch TV, if Level Up in Real Life, and I'll go ahead and put that in the chat here. Everything is pretty much level up in real life. And so levelupinreallife.com, but also Level Up in Real Life on Twitch TV. What we do is we play cash flow, and we usually do it on Monday night. But we're going to work on that tonight. We're going to be so the Level Up in Real Life Twitch on channel on Twitch TV. We're going to be live. We're going to be strategizing on investments, and this is not just when I first got into this. Yeah, it was just real estate, but a lot of times when you start to think about real estate in business, how I told you, everything is correlated to a business. Every single thing we touch, there's a business associated with this. And when you start to realize that everything has the potential to be invested in, it will change your entire outlook of your retirement account. Because think about what you just enjoy. What do you love? What are you passionate about? Are you passionate about clothes? Are you passionate about going to the gym? Um, have you ever thought about just taking your retirement to the next level? So, should it be in a rental property, or should you do fix and flips? Or should you own part of a gym? Or should you own part of a restaurant? And leveling up in real life is about breaking free from those traditional thoughts of we have to invest into this business because this business that's a mutual fund is what my employer offered me. But if you start to think about, hey, what about I've always wanted to do this, or my friend has this auto shop and it's thriving and he's looking to open up another location, and that would be something I'd like to invest in. But then you're thinking to yourself, well, I don't have $100,000. Or do you? And that is where we come in, because I guarantee you, if there's something like that that pops up that you want to do, money is not the object. It's can we wrap your mind about owning part of that and putting that into your retirement account? That's why we play cash flow. That is why we come here each and every week, because honestly, it may sound like we're talking to you, but in reality, this just helps nail it back into our head each week. Have you ever heard that where it's like, hey, I'm actually just kind of training you guys so I can continue to get trained? It's absolutely true. It absolutely is. I love all of you, and I'm so grateful that you're spending your time with us tonight. And I know that the holiday seasons gets a little crazy, and everybody out there gets crazy. But we do it, one, because we love you guys, and two, we want to see you succeed. And especially this time, take some of these strategies, maybe it's just debt efficiency, and talk to your friends and family about this and start to open that door where everybody can start to be free to express their concerns with each other. Because at the end of the day, whether you talk to Richie, you talk to me, we have to break through this barrier of talking to our friends and our family. We've had these barriers of we don't talk about politics because we're afraid we're going to offend somebody. We don't want to talk about religion because it's taboo. We don't talk about finances, but start to drop a little bit there. It's like take Christmas. If you're celebrating Christmas, take that time to talk about Jesus to a friend, you know. But also, if you're seeing family members, however you're seeing them, live in person, on the phone, or via Zoom, take this time to say, hey, I learned this really cool thing the other day about efficiency. And my goal for 2021 is to get out of debt. And so this is one thing I was checking out. There you go. Because when you have a support system built, you're going to go much further. And if you can't find anybody like that, keep plugging into us, because we will continue to be here each and every week to help you achieve your financial freedom. Because as long as you're doing it, we're doing it too. And I believe that's just about all I got for tonight, folks. Wanted to wish everybody a extremely joyous holiday season, a Merry Christmas. We will be continuing after Christmas next Tuesday. So, starting of the new year. And we got some good stuff planned. We got an excellent case study. So, make sure you spend some time, after Christmas looking at the budget. You don't necessarily do it right before Christmas, there's too much time for other things. But let's get that budget. Next week, we're going to talk about some case studies. And if you want to see some business owners and entrepreneurs and how they tackle investments in a board game, tune into Twitch TV tonight on the Level Up in real life, where we are going to strategize, and come hang out with us. Other than that, Richie, thank you for being here, sir. Once again, thank you for everybody who joined us in the webinar. Richie, any last words for our viewers?
No, I'm pretty good, man. I mean, thank you so much for heading this time up and having this really awesome training that you always do so well. And I can't wait for what we have primed for the next year. I know that a lot of people may have those goals that they were trying to attain during 2020, and 2020 happened, and so you're not alone.
You know what I'm thinking too. As we are going to do a case study next week, but maybe we could do a little strategizing on some ways to set some goals.
Absolutely. I think that might be huge because the case study is going to go by, I would say, uh, very clearly but quickly. Considering the actual process that we do. But when it comes to goals, right? And this is one of the main reasons why we made Level Up in Real Life is to help other people succeed. But I'm also pounding the fact that I want you to exceed our expertise if at all possible. That would just be so amazing to be able to prime yourself into setting yourself up for 2021 and having that knowledge and that experience behind you, and the support behind you, using up the Level Up in Real Life system and every other tool that comes along with it. So I'm really excited for this next year. I was gonna say, like, even though 2020 happened, yes, my goals actually got set back, but I am about to close on two properties here, so wish me luck on that. you
Hey,
know, right?
excellent.
Like, I know.
Congratulations.
I'm so, like, it's like I'm gonna be able to get this done before the new year.
I
Yay,
was gonna
whatever.
say, are you closing before the 31st?
Yes, like we got one guaranteed for this week, but then, like, this one may go next week, and hopefully, if we can get it for next week, then cool. But I'm okay with delaying it until after the first. But I'm just gonna count it as a win for 2020 because the process already started during that time. Um, but yeah, like I said, like, goals may have been set back for a lot of us, but the cool thing about this is I truly, truly do believe that we have the tools to make our 2020 and 2021 goals happen in one year.
Mm-hmm. Absolutely. I fully agree.
So thank
Fully
you so
agree.
much, Ray. This has been such a weird year. We've accomplished, we've also lost, and as heart wrenching as the losses have been, I feel like there was a reason that there's a reason to be grateful for certain things that stemmed from those losses. So I want to thank you so much, man. You've been such a soldier in this. You've been such an amazing person. And so open to creating those win-win solutions for everybody. So thank you, Ray.
Oh man, Richie, thank you. Thank you for helping me. Thank you for stepping in and really bringing your skills to this table, man. I couldn't have done it without you.
For sure,
So
man.
thank
Thank
you.
you.
All right, everybody. We will see everybody next week. And yes, everybody here, whether you're in the Zoom call on YouTube, thank you. Thank you. You give us a reason to keep it coming back, and we want to hear your success and see you succeed. Other than that,